Hello, everybody. Kirk Spano back with Scott Shooter Henderson for today's major markets report, where
Hey,
we're going
buddy.
to look at our normal stuff. And then Shooter has a few sectors and industries that he wants to look at. And this particular program is designed for position traders, people looking to enter positions that you're going to hold for quarters or years. Generally, quarters, I think, is how you start. And if it lasts longer, that's great. Generally want to get a full year in so that we get favorable tax treatment. Shooter, how are you and how's the dollar?
Well, it's like in no man's land, which actually is good because then any FOMO we get, it'll be to the upside. But I'm awesome.
Good, good.
Yeah, the dollar's in no man's land. It's actually, right here or right around the 250 day, whenever we're there, it doesn't necessarily weigh on indices and it doesn't give it a tailwind. So that's one reason I think we had that pump going into the weekend, because the dollar was actually, I think, a little favorable for that. With that, I'll transition to the SPY. Now, got a nice breakout. We're above our resistance band at that 479.98. So right now we're looking for that 483 minor wave. Then we get a shallow back test and we head towards our primary wave 3 around 485. So this could actually get a little euphoric. I mean, if we have good FOMC news, I would expect this to extend. So I could see us pushing 500 or 510 out of positive, in other words, a pivot from the Fed. Make sense?
Yep. Somebody mentioned potential euphoria this year in their annual forecast. I can't remember who that guy was.
Now, one thing I'm noting on a couple of my charts is I'm sort of highlighting a spot for covered calls. If we start to WAN, around this 3, that would be a good spot. Just go a little bit above that number. But outside, it's not really like, hey, buy this kind of notion that I'm putting up there. It's just, hey, if we end up in this flat, that's a good option if we continue in, to grind to this sideways sort of, like we did here for a while and like we did here for a little while. Quite often we do that. We build out those flats. So, well, let's jump to the NASDAQ. Now, this actually has quite a little bit more euphoria. We actually got one heck of a good push. And it even took out some of our shallow counts on the Magnificent Seven. So they started running in unison again, which was actually very promising. So right now, this is like one general. So when we usually get this, if we get a run, we'll get a second general and a third general. And then this 3 will push, is most likely what I think will occur here. So right now we're looking for that 428.66 with a shallow back test again. So again, we're going to want to watch those back tests, both on the SPY and the NASDAQ, because that'll tell us a lot whether or not we're going to continue. If we don't get past the 382 fib, basically you just put a fib extension tool up on your last leg, measure it. If our back test doesn't get below that 382, then chances are we stay euphoric. It gets past the 50% fib and starts pushing to the 61.8. Then our trajectory might change as far as the slope or the degree or the angle that we have as far as the push. That makes sense?
Yep.
Okay, let's jump over to the Dow. Now, actually, I think the Dow is going to get choppy here. You remember how we had that breath come in and we started expanding and then we had this nice little run. So I think the Dow maybe builds out a flat here. It might push up to that 3 and then build out a flat. But, at this point, we get a pretty broad back test to our primary wave 4 off of that 390.73. So, that's going to be a zone there. We want to watch that too, because if it stays there, the breath might stall again or stay as we are, add a few stocks every week or whatever to the positive side. But we really need the Dow to accelerate just like it did here. In other words, put in another leg very similar to what we got down here for the breadth of the entire market to continue to expand. And that's, I hope it does, because a lot of the stuff I'm looking at actually looks really positive there. So, all right, let's jump over to the Russells. Now, this is the only thing that looks a little bearish as far as the count. We had our primary wave set up short at 205.49. We're coming in, we've put in our 2, we should put in our 3 around 183, and then we bounce a little bit to that 188.71. Now, we would need to change direction here again for us, Dow theory is, all 4 indices need to be heading in the same direction for us technically to be in a bull market. Okay, right now, so technically we're not in a bull market because the Russells is not trailing with the SPY or the NASDAQ. And like Kirk mentioned, if we do change directions, it'll be right down here on this 4. The count would switch here, then we would head bullish. That actually could be very euphoric, very much like what we saw here. So this would become
we're really close there.
Yeah. Yeah. I mean, we're just not quite 50% back, but it's marginal here. You get these crossroads in Elliott Wave where they can go in either direction. And, that's sort of my view on the Russells. But right now, I think what's weighing on the Russells is the financial pictures with small caps, because that right now you have hundreds, if not thousands of small caps right now trying to roll over their debt. And the terms are horrible. The loan to value is horrible. I mean, I would be very surprised if they're seeing 50 and maybe some 60% loan to values versus where maybe they got 75 or 80% at the peak of low interest rates. So,
on the real estate side, for sure, right?
Yeah. Oh, yeah. Oh, yeah, definitely. Which is one reason a lot of the real estate stocks are heavy now, because we haven't really gotten the first quarter's numbers out for the rollover. The big numbers hit second and third quarter, but we start seeing the rollover debts that occur going into the later part of the first quarter. So really until the end of March, we won't really know how we look there. So, honestly, if it comes in light into March, that would be a point where we should get a good rally in small caps if that financial information is positive. So let's take a look at treasuries. Now, we're pushing a little bit to the downside here. Now, one thing here, the FOMC I believe it's this week, is, going to have a big factor in this. We could change direction on a Fed pivot. I don't think they give us a Fed pivot. I think they stay right as they are. I think the most they might do is maybe mitigate how much they're rolling off, reduce the size of their roll off.
Well, they're going to talk about it, right? They'll talk about it.
Yeah. And so at that point, I think we continue lower unless we get more positive news towards that pivot. We get a positive shot at that pivot, then we could reverse and go north again. So just you want to keep that in mind, any positions you have on. Right. I had some 94 puts in TLT. I covered those this week. And then the count shot a little bit lower down to that 92.86. I was planning on jumping back in around that 95. But and any questions on that?
Yeah. So leave that chart up. Probably 2 years ago. I'm trying to think exactly when we talked about this. It was about 2 years ago. A lot of people use the 61.8 line.
Yeah, a lot of traders do.
And I pointed out a couple of years ago that we're seeing a lot more of the 78.6.
Yeah, there's a different. Commercials look for the 78.6. So in other words, it gets down to the 78.6. They're buyers.
Yeah.
Okay.
I think we've seen more of those. So we've seen more of those.
Yeah. No, I wouldn't say you're probably recognizing them. I still think again, the margin of safety, one reason I like 50% is because I'm right more often. Right. 61.8, I'm right a little less. And the 78.6, I'm right even a little lesser. So
maybe I was just looking for the 78.6 more. Yeah. And that was my brain saying, hey, look.
Yeah, it could be. I mean, I don't recognize it as being, sometimes it is in certain, like sectors, when they're running, you'll see shallower back tests around in that 382. So there's certain things that I look for. So when I'm looking at the sectors, I'm scanning through the stocks. I'm saying, okay, who's where? If I recognize that, hey, all of a sudden all my stocks are retracing to the 382, then obviously that sector ETF is bullish for me. However, if all of those stocks in that sector are retracing below the 61.8, it's kind of bearish for me, or flat, because now we're more likely to build out that flat. So that's sort of my thought there.
So I have a question for you, and I'm not sure if you have a canned reply. Do you have a 30-second, 30,000-foot view of what the fibs are for people? So I've explained them 2-3 years ago. I haven't really explained them a lot. I put them on my charts, and then I take them back off.
Okay, so
what they are for folks?
Yeah, that's fine. That's fine. We can do it. I don't have well, I'll just do it right here. Okay. There are two fib tools I use. All right. The first one, and I'm going to go out to the 2 week here just to give you a good visual on this. And forgive me, I need to extend it to being visible on that 2 week. Now, I use what's referred to as a Fibonacci extension tool, which basically measures the cycle. So you measure your peak, your trough, and your trough again. Peak or trough, peak, trough. And it gives you the cycle measurement. I like it for the bigger picture, because then my targeting mechanism in Fibonacci's work. Now, basically, a Fibonacci extension, obviously, is the ratio of the move. So in other words, if you move up to the 50% fib and you're using an extension tool to measure it, it's measuring the ratios based on that. Whereas if you have a standard fib tool, which is what most people use, by the way, like 90% of the people in the market, especially retail, use a single fib extensions tool and do not measure the cycle waves at all. Okay. But it also doesn't give you the height. So it's, from looking at a larger picture or position trade, it doesn't give you as much of measurement. But ultimately what you do is you measure your leg, based on your low and your high, and you get your fib extensions. Now I have a shallow set of fib extensions here. And let me just bring in the full extension tool just to give you guys a visual of what that looks like. So, it based, on those extensions and, the measurements that you have at those different levels. And, it can go all the way up to, 1600 because, it's, based on those multiples where it just keeps growing. So, but I like to stay in a little box. I like between the 0 and the 100 fib. And, basically a 14.6 is really shallow. Obviously there's a 10%, there's a 23.6, there's a 27.6, something to that factor there, et cetera, et cetera. But I've highlighted, where the most likely numbers are as far as our extensions or our retraces. That makes sense?
Yeah. And so the other thing I was going to get at is people ask why these numbers. And there's a couple of reasons. The main reason is at this point, everybody uses them, right? So they are almost standardized. But the underlying reason is that these are based on ratios that reappear in nature and in human psychology over and over and over again based on the golden ratio, right? So these are numbers, the 61.8, the 78.6, the 38.2, the 23.6.
The golden ratio.
Is the 14.6 one of them too? Because the 50% is not part of that. That's just the halfway point in our heads. We need to have it.
Well, basically you take the multiple. Your prior number plus the new number is your next. So 14.6 plus the 236 is the 382. Okay. So if you take the 236 plus the 58, right? Then you get your 61.8, and you're right about the 50% fib. But right. It's such a psychological number, which is why we mark it.
Right. So if you've ever tried to figure certain things out in nature, these numbers come up over and over and over again. And
look at a clamshell.
Somebody finally
it just spirals out and consistently gets bigger and broader. Same with chart patterns. You'll notice the same thing.
Right. So these are natural, is what they are, is why they got used in the first place, because science, and you see it in farm fields, discovered, hey, these ratios, whether it's, distance to the moon or waves in the ocean, all sorts of things correspond to these freaking numbers. And so it got adopted for the stock market. Now it's in the mass psychology. It's a tool that kind of leads to an outcome because so many people are using it, right? It's kind of predetermining that these are just going to keep happening because so many people accept and use.
If everybody sees the 61.8 and they all sell at the 61.8,
right.
Obviously in your holding, it's going against you. I mean, so
right.
Really the golden ratio is that. It's that simple. So it's, with me, I'm not a mathematician. Honestly, I have a hard time remembering numbers completely, but it's just a simple way to find a point to take profits or a point to enter,
right.
Based on the Elliott wave patterns, the legs, as I call them. The overall picture is the count. So it's like a stair step up, but it's also often an escalator down or an elevator down, or it can be a staircase down as well. So the fact is reversion to the mean always occurs. And we see that a lot in the small cap stops. I mean, I'll just use for example, TDOC, as an example. I mean, 100% return off of from its lows, from its peak. And, so there's that rhyming pattern in the golden ratio that we look for, because basically we know there's going to be a bottom, we know there's going to be a top, then we know there's going to be another bottom. So based on how that collectively mixes with Elliott wave, we can determine, hey, what's the likely retrace that we're going to get? So when we put in our cycle wave 1 here in TLT, I'm always looking for 50% back. I want 50% back because then I know it's pretty much done. If it gets a little bit more than 50% back, gets to the 61, it's a little oversold. It gets down to the 78.6, without a doubt, it's oversold. That's simple.
Yeah. So one of the things I would say about using Fibonacci's is, okay, so they occur in nature and they've been adopted to the stock market. Because so many people use this approach, it tends to happen over and over again. The bigger pullbacks reflect market psychology. So if the pullback goes, instead of the 38.2, it goes to 61.8 or 78.6 or 100, that just means that the psychology is driving it in that direction. So if you can have a qualitative analysis of where psychology is, then you can say, okay, well, we should just, we should be careful and wait for these deeper corrections. And somebody mentions in the chat, when I go back and log charts with the fib retracement studies, it's amazing how often they hit those numbers, right? It's a lot of people using the same tools, which kind of forces the outcomes to be in that range, right? So
yeah, and it's like
people have asked me, what are fib tools? Why are we using this fib? What do those numbers mean? So we just explained it. It's in nature. It's been adopted, and now it happens. I think I haven't seen a study lately, but I bet these numbers get hit closer and closer. I used to show these lines on my charts, and people would be like, how did it end right at the 78.6 or right at 61.8? I'm like, because it just does.
Yeah.
I was like,
honestly, that's where support is.
Yeah. Well, it's, remember the beer, Bud Dry? The line was, why ask why? Just drink Bud Dry. Right. Yeah. So why ask why fibs work? They just work.
Your odds are in your favor, if you focus more in this little box right here, which is why I came up with my golden box. I mean, because that's right where that target zone is.
Everybody wants a golden box.
Exactly right. I want it to work every time. I don't like being wrong. So, all right. Let's jump. Let's jump to crypto. Now I'm going to start with GBTC. Now the application is in for options for the ETF. The SEC has not approved it. The SEC also delayed the Ethereum application because they were trying to get an ETF for that as well. So now I suspect that, we've had a lot of selling coming into GBTC, but you also realize there's a lot of holders. They have 667,000 Bitcoin. And, this week they sold 12,000. Last week it was 10,000. Then it was 5,000. Then it was like 2,500. So they've basically been increasing a lot. And part of that is because they have to settle in cash. So as these shares are flipping, for them to raise capital to pay off the people who've exited, they have no choice but to sell these Bitcoin. So this might sort of get us stuck in this little flat for a while because they may have to continue to increase that volume. But right now, the count that I have is we are heading for this minor wave 2, about 35.03. Then we should bounce, and we're just going to chop around on this range. With that, I'm going to flip over to Bitcoin. Now, one thing that I have to the left of my chart, these are off numbers. There are significant off numbers throughout this push up, push down, this whole range right here. And off numbers, obviously, is the close of that particular day, week, or month. In other words, what people settled on as far as a price at the end of the day. So the commercials agreed on that price. So when it's 39,975, that was the close of that particular candle. And they, floor traders use this religiously to buy and sell. So at each of these points, we should see a little pop because the floor traders will be buying it. We have this confluence here between 38,600 and 39,975, which you'll notice that's where our retrace went to the first time. And the minor wave 2 that I'm predicting now is at 35,501. And then we should head back towards our highs. So then we'll come back into this band here of where those off numbers are. And then we'll put in our primary wave 3 at some point around 58,000. So this also should be choppy. But once the ETF options become tradable, realize we are going to have an onslaught of different strategies that come into this market. Everybody and their mother who is a professional is going to want a piece of these. That is going to drive volume into Bitcoin. So at some point, we could actually see something where we push a new high, get a back test, and instead of this 4 being a deep retrace, it becomes a shallow retrace and becomes a launching pad to the upside. If all the stars align in the markets for us at the right time. Obviously, I'd love to catch something like that. But, right now, at this point, we're sort of in this flat, and I don't see much changing until that ETF gets approved. Any questions on that?
Yeah, so a couple of things. So first of all, people are wondering why Bitcoin didn't shoot straight up when the ETFs came online. And it's because of what he showed you. Grayscale has had to sell a lot of Bitcoin, right? They don't just give it to BlackRock or Fidelity. They sell it. And then BlackRock or Fidelity, as they get inflows, right, they have to buy it. So right now, supply and demand are offsetting each other, because the selling of Grayscale, which is at 1.5% expense ratio, people are taking their profit there. They're looking at these charts and they're like, okay, I'm going to sell right now my Grayscale, and then I'm going to go out and buy Bitcoin when, the selling is done. And so for the next 2 to 4 weeks, I think Bitcoin is going to be choppy. In that time frame, you're probably going to see options get approved, because if BlackRock's asking for it, it's going to happen. ARK is, the SEC is not going to do anything for ARK, but, BlackRock is the government's money manager. So it's going, there's going to be options soon. I sent out an email to my Interactive Brokers clients. They asked them, do you want Bitcoin in your account? And I told them, here's what you have to do. I need you to say it's okay. And you need to go into your account and enable those particular ETFs to be turned on. I think that process is going on pretty much across the board from the financial advisor community. And you're going to have financial advisors trickling in through the next couple of years to use these Bitcoin ETFs, which are not turned on, even though they're legal and they're out there on the market. They're not turned on in everybody's brokerage account because they are considered complex instruments. So
higher risk.
They're not available to everybody with an advisor managed account. That it's a risk and compliance thing, and they're going to take time to come online. So the next 2 to 4 weeks, I think this choppiness that Shooter is talking to you about is your buy opportunity, because once there's a lot of call options on this stuff, and there's going to be. Remember that short squeeze that we got on a Metis for about 2 to 3 months, where it went straight up. It went from $1.50 to $8, right? The same thing is going to happen for Bitcoin. There's going to be a hell of a rally in Bitcoin. It's going to be parabolic. And once that momentum ends, right, once those call options start to get cashed in or expire, then you get a correction that lasts, 2-3 months, whatever it's going to be. So I think that you really want to be accumulating here, because once there's call options out there on the BlackRock ETF and on the ARK ETF, and who's the other big one?
Right now, iBit is the one that has the most FOMO.
Right, that's iShares. Right, so that's BlackRock.
Looks like they're going to end up being the leader because of their fees.
Oh yeah, they're already the biggest. They're going to. That's the one that I'm using. That's the one that I'm shifting into. So
let me jump back to the count here. Here we have our intermediate wave one. Notice how long that is. And now, right now, the way the count is measuring, it's a leading diagonal. So in other words, our 2 is our broadest leg. However, notice how shallow the retrace was on leg 1. We got down to basically just a little below the 236.
Right.
Now, that is always one of the first things, what it tells me, and obviously, unless you've seen it in as many charts as I have and worked with these technical tools as much as I have, you might not see it the way I do. But first thought is 3 becomes the longest wave. That's the first thing on my mind when I look at that. Right now, all of the technical factors are in line for that to occur. And, that is where, so this 39, is challenging. The question is this really our 1, or is this our 1 up here? Because it really could be, sort of a jagged 1. This be our 1, this be our 2, this be our 3. And, so we could have a shallow 5 here on this leg. So in that circumstance, we'd have to take this fib tool and push it up and say, what is our back test here? So once we get back up to that 49,000, which, by the way, anytime we've hit an even number has always been a top or a bottom, always at one point or another throughout time in Bitcoin. So it was very significant that we pushed to that 49K and then flushed. So the minimum we're going to look for as far as a retrace should be that 23.6 at 43,000. So once we get back up to 49,000, if the retraces are shallow, that's your notice. It's telling you, here's your sign, buy it. Okay, if you haven't entered there.
So one of the reasons I asked about the fib retracements a minute ago was because I know historically Bitcoin has traded with Elliott Wave really, really well.
It's almost perfect. Almost
and
perfect.
And if the correction is only going to be at 23.6, or right, if the correction is going to be a shallower correction, what does that say? That says the market's really bullish on this. So
Yes.
the deeper corrections, your 61/8, your 78s, that reflects neutral to bearish, but those shallow corrections represent neutral to bullish. And I think that you are seeing just how much strength the Bitcoin has. The bullishness on Bitcoin is, I honestly, I haven't seen this since the 1990,
look at this leg here.
1999 tech rally.
Look at this leg one right here.
Yeah.
This is almost exactly the same. And what do
I
we
haven't seen this kind of bullishness since 98, 99. I really haven't.
See, if I just steal this leg and put it over here,
yeah,
it puts us up at that extended 3.
Yeah.
I mean, it's just, the upside here, if we get derivatives in here, and the reason I'm pumping is because we are on the cusp here, even though I don't think Gessler is in favor of any expanding Bitcoin at all. I don't know why he's afraid of it, but that may be coming for other reasons, but still, I don't think he can stop it at this point. And, unless some kind of regulation comes out that prohibits certain types of use, I think good regulation will just accelerate us. So that's sort of where I'm at.
I agree. I completely agree. I updated an article that I have on some of the feeder pages from 100,000 on Bitcoin to 300,000. I'm convinced that we see 300,000 on Bitcoin, and I don't think it's going to take that long. It'll be this decade. The volume. It'll be this decade.
We just need the volume. Let me jump back to one thing I wanted to point out, because you notice how, we went through those weeks where breadth expanded. And, I always I have tells, things that tell me different things. And utilities is a flight to safety. Right now, we have no flight to safety in this count. I'd like to point that out.
Yeah.
So all we really need is for breadth to continue to expand. It doesn't need to expand quickly as far as indices or stocks are concerned. All it needs to do is be consistently grinding higher. And we're going to consistently see more and more stocks start participating that haven't. So let me jump into the rest of the ETFs. I've got a couple of them don't want to be too long today. Emerging markets, we spoke about it, had a nice flush. Notice how we had the seller exhaustion occur in that candle. So our minor wave 2 was down at 37.48. So there's a good chance we get that launching pad out here. So emerging markets might come back. But this is a great spot. I noted in chat, it was a great spot. As soon as we hit that floor, I said, great spot to sell some cash secured puts. If you don't have a position on this, it does look to me like we have a good base. We have a high and tight divergence in our count for this bottom here. Now that's a drive 1 though. That's the only thing with that look. I mean, we could get up here if we don't break out above our prior highs, like right around 42. Then we could reject price again and come back and give us one more lower low. But I think first we go up there and test those highs around 42. So from wherever we are now, it's still, I would say the minimum move is about $5 higher. Yeah. Any questions on that one?
I would just point out that I'm still on board with buying a few commie stocks. I am adding Tencent and Alibaba to the growth list. It hurts me to do that. So when I do something like that, folks, right, when I fight my general ethical nature to put something like that on there, it's because it's becoming kind of an overwhelming story. The China stocks, when they start to print money, I tell you what, you're going to see. I'm having a hard time finding the bearish arguments given the expanding liquidity situation, and the valuations of Chinese stocks like small caps in America are so low. I mean, there's just nowhere for them to go on the downside anymore. So any capital flowing into Asian and Chinese stocks is going to push those up.
Yeah.
And
I prefer the ETF over single names here. The only reason is
I agree
because there's just so much. What the CCP, they really don't have a political economy at all. It's solely a dictatorship. So if the CCP doesn't favor large corporations like in America, which they don't want a single person to get extremely wealthy. So, that's one reason I prefer an ETF here as far as emerging markets in China. Right?
I agree. And we have a half a dozen ETFs that we can use. So I mentioned Alibaba and 10 cents because that's their Google and Microsoft.
And they look decent. They do. I'm not saying they don't. It's just, reason is, if I'm going to go into a market that presents a little more risk for me,
right.
I would rather have a broader view, because honestly, one stock gets hit, it's not necessarily going to hit me, kind of thing.
Right. Correct.
So then boom, I want to jump over right to look at that candle on socks. It's just a beautiful thing. We broke out of our highs here at that 559. Then we regrouped, back test, went right down to trend support, and we're running. This thing is just a beautiful thing. Now, I want to point something out on this chart as well, because this is the bullish thesis. Now, no, it's really not measuring it. It's showing an ending diagonal as far as the count here. But realize that wave 3 is not the longest wave. So, wave 3 in a euphoric market could become the longest wave. So we could be looking at about $700 on socks pretty doggone quick. Now, one thing about the structure of this entire Elliott wave count is, notice how we constantly blew primary wave triggers. That is one of the cleanest uptrends you can have in a stock. And there really is no reason. We now back tested the lows we broke. So we had like drive 1 grouping, drive 2, drive 3. And what can drive 3 always be? An overshoot. Boom.
Right.
Those are launching pads. So this could get extremely euphoric. Any questions on that one?
Where do we think are we going to get a pullback in the next week or two to buy? Because I think what the market is starting to recognize,
if it happens, FOMC.
Right. Well, so what the market is starting to recognize, though, is that the second half for the semiconductor companies could be really good. Semiconductor companies have gone through about a year and a half of basically sideways earnings as they've consolidated their business, built out supply chains, blah, blah, blah. But we know that there's, what was the number, 5 times more semiconductors needed this decade?
Yeah.
Than we've had.
And now we're replacing them all for bigger chips.
Right.
Because of AI.
So, you're about to see another huge wave of demand into expanded supply, but still it's going to be tight supply. So I think semiconductors could just
either you do, like right now I'm looking at chips, and because either I do it, or I know the guy down the street who's trading just like I am is going to do it and he gets ahead of me. I don't,
right.
So the reality is either I level up, right? It's sort of like the rules here in Texas, go big or go home kind of
right.
thing. That's the way it's going to be with technology here, because either you're on board with it or you miss it. And I think that's the case here. So, but I think if we do get a drawdown, I think it would occur around FOMC. So we want to watch going into it. If we start wanning, typically, historically, we always run into FOMC, and either we run right into the announcement or we wan the day before. So those are usually the 2 roadmaps that we get. So that's sort of that thought there.
So we're looking at a price between 575 and 557 to get super involved.
Yeah.
Okay.
Yeah. But I don't think we get it. That's pretty euphoric. Coming out of this consolidation here.
Okay.
We had this consolidation over here, and then we had this push. This is so much more euphoric than this move.
Yeah.
I mean, it really is. I mean, that's totally different look. All right, let's take a look at XLF. Now, one thing that you have to have for a bull market is financials have to participate. So now we're starting participation here. So this is something I think that continues to move to the upside. I think we test this January 22 resistance band around that 4083. So I think that 3 is very viable. And note how we have this shallow 1 on our primary wave. So 3. Now, the only thing that could happen here that's kind of negative to the further upside is that quite often this 5 can become very shallow when you have a shallow 1 like that. But, we really need volume to back off. And, right now the green candles look decent. I mean, we don't have this here. Okay. We would, this is going to have to start at some point, right around this resistance band for us to really start pushing. But, it's on the right side of the fence for us to, get back into a total bull market.
Okay.
Okay. Then I wanted to look at Select Healthcare. We're right at the breakout line, back testing it now, had a nice top. So this is drive 1 for me, in this look, even though we really had sort of a drive here. The count we should get at least 1 more high grouping, no matter what, up in this range. So around the 50%, about 162, and our count happens to measure to that 159.84. So I think that has some significant upside.
All right.
Okay. Well, that's what I have.
I've been talking about healthcare for a while. I think there's a lot lining up for it.
Yeah.
I seem to have heard a lot of buy the dip on this call.
Yeah. We were sort of chattering that a little bit.
Yeah, I think so. I think
so.
I think that's where we're at. I think we get some shallow corrections. You're probably going to buy them if it's not the end of the world. End of the world always happens, when you least expect it. But I don't think it's about to happen. I think we're much more likely to get monetary stimulus, or at least pull back on all the tightening, at least for a year.
Jobs are strong. I don't know that we really need stimulus to get out here. I think AI could take us.
Well, they need to help the banks. You just pointed out that financials have to participate, and the only way they participate is if the inverted yield curve flattens out, and they also need to fill their balance sheets. Their balance sheets are going to have big holes this year, and that hole has to be filled.
Yeah, the one thing that we did out of the Great Recession is we started that deferment process in residential loans, and it worked. Basically, it kicked the can down the street, so people who couldn't pay their mortgage didn't have to make a mortgage payment. Matter of fact, they didn't have to make a mortgage payment for almost 2 years. It was like 16 months. And all they did was roll the principal to the back of their loans.
Yep.
First time in history that we've done that. Now, the recent FHA programs have just recently canceled. They need to be renewed. So there's really not that safety net in residential right now. But honestly, I think if the commercial real estate gets in trouble, the office space sector, I see no reason why they don't do a deferment program just to kick the can down the road and do the same thing, because they now have a perfect model. It basically costs the Fed no money. It was a balance sheet charge off for the interest for the lenders, so they got a write-off for it. They didn't have all these foreclosures where they were dumping properties for 10 cents on the dollar. I mean, it was a win-win for everybody. So I think that's what they ultimately do if we get in trouble.
Shooter, you make it sound like the Federal Reserve works for the banks.
Well, I don't know, but
Yeah, who the Federal
that's my
Reserve
2 cents.
For.
What can I say? Hey, I've got some good thought.
I got yelled at by an editor because I talked about how the Federal Reserve basically works for the banks. He said that's not who they work for. I'm like, the banks own part of the Federal Reserve. I mean, of course, the Federal Reserve works for the banks.
Who votes?
Yeah, that's right.
How many GS guys vote on these boards throughout America? I mean, really?
Yep.
There's one on Apple, right? There's 2 on Google, right?
Yeah.
On Tesla.
Yeah.
I mean, so maybe they don't have a collective where they all control a certain interest, but they vote.
The Wizard of Oz.
Yeah.
Wizard of Oz. Did you know that the Wizard of Oz was written about that, right? The Wizard of Oz is written about the post Civil War era and who really controlled government and the central bank at the time. Mm-hmm. So if you really want to understand the Wizard of Oz, right, it's not about a girl. I mean, it's not. I mean, it is because we see it in the movie, but it's not. If you go and pull the original Wizard of Oz and read it, and then read historical accounts of what it was really about, you know where I learned about the Wizard of Oz? In a money and banking class. All right. So this is not new stuff. This is 150 years since, the Civil War of how this all works. And
it's 300 years now.
Yeah. Well, it's Hamilton, right? So, I mean, if people really want to take entertainment and read the subtext to it, whether it's Hamilton or the Wizard of Oz or whatever, you can start, then you go into the source material. And it's just, you remember the movie, The Hunt for Red October?
Yeah.
Right? Do you know who's the author? Now I suddenly forget the author's name. I don't remember. But in any case,
recalling it either.
The Hunt for Red October. Do you know how he got access to be able to make that movie? And it was kind of like a Navy's version of Top Gun, right? And it ended up being a recruitment movie. But he wrote something where he just got all the source material from the libraries, and he wrote a paper on submarine warfare. And the Pentagon read this, was like, how the hell did he know this stuff? It's because most information is actually in the public domain somewhere, but you got to find it. Now, AI,
you got to do the work.
AI is making it easier to find than it was just a year ago.
Yep.
But, with the banking system, I don't know if they officially do a deferment program, because I don't know how the legalities work, but if the Federal Reserve creates a special facility that helps the banks take their write-off, but fill the hole in their balance sheet, now they're free to sell those properties to developers because it's not a cash loss, right?
Yeah.
So they
Well,
don't have
that'll occur to some degree no matter what, because certain banks will, it's not like they're totally obligated to follow the rule. It's just like with the deferment residential. There were
Right.
some lenders that did it and other lenders that refused to do it. So,
Right.
I mean, that'll be the same case.
With commercial, there is a lot of people with money waiting to buy that stuff at a 50, 60, 70% haircut.
It depends on how much of it comes on the market.
Right. Well, the banks can't sell until they know they can fill the hole in their balance sheet. Because they don't
remember 87.
Right. They don't have to necessarily recognize.
Yeah.
Right. They don't have to necessarily do the mark to market.
Yeah.
The minute that they know that it's there.
Yeah, that's right.
They get some time.
Yeah, 87 took 13 years. I mean, basically, commercial real estate just died because we had 14% interest rates.
Right.
I mean, and that cycle's too long. So I know that they're going to come up with something. If it's not the deferment plan, it'll be something similar to that, because now that they found a better box or better mousetrap, there's absolutely no reason why we have another real estate, or they don't let it get as bad, or they let it get as bad as 2003 through 2009. I mean, there's no reason for them to do it when they have that kind of fix.
Yeah.
That's my take.
We should Stephen Colbert has the Meanwhile segment. Meanwhile, we should have something like that called conspiracy theories. This is how it really works.
Yeah, I don't want to be focusing. I want to focus on trading. That's it. I want to get in my box and that's it. Focus.
Right.
So,
what I'm saying is that the whole thesis that the Fed is going to be a little bit nicer or a lot nicer this year is tied to the banking system and the dollar. And what we know is that when there's more dollars in the global system, the more people use it. So they've created a scarcity of dollars over the last couple of years of quantitative tightening, and now they're going to fill that gap. So it's going to coincide with the banks. And we've known since 2020 that we were going to have this problem in 23, 24, 25 because of the loans that were coming due. Because again, commercial real estate is generally on 5-year loans. So for this year and next year, we're just going to fill that hole, and the banks will be whole again. And we're going to go into a cycle where they can lend again, and where money's going to find its way into other risk assets. And then the whole thing will blow up at some point. But, until then, we can make some money buying the dips.
Heck, and we can even make it when it crashes.
Don't worry about that when the time comes. All right, everybody. Thank you very much. I'm going to go make pizza with the munchkins.
Fantastic. Thanks for having me, buddy.
All right, everybody take care.
Until next time, folks.